We're live. Or not live, but recording.
Okay.
Second floor, I'm talking second floor, like, go up there and two guys with shoots like yours, they're there for 2 minutes, been there for an hour. Yeah, most of you do have any problems? No, I don't, but let's see, there's 3 of them. Yeah, oh, now they're on TV, so they get paid to be there.
Okay, I think we ought to get started with our finance meeting, ladies and gentlemen. Good morning again, 9 a.m., November 5th meeting of the Finance Committee of Council. The first item on the agenda, and I think the way we should do this for the best interest of all involved, let's talk about the 23-24 audit. We can talk amongst council. I'd like to have it be as interactive as possible. It's open to public comment for that portion. And just so everyone's aware, those of you who haven't met, we have John Chamberlain with us, who was leading the audit in the auditing firm, and Linda Chapman, again, our interim finance director. So with that, bullet point number 1 is the review of the 2023-2024 audit. And I'm happy to get it started if we'd like to. I've got some notes from comments that we've heard at previous meetings, emails that we've received. Why don't we start out with the big one and open the conversation there, which is the inability of the city to reconcile the $322,498. I'll open the floor to discussion on that.
You guys, you want to speak
I
to?
couldn't hear from the coffee.
Open the floor to discussion.
Oh, okay, I'm sorry.
Yeah.
I think we can, if you want, we can go ahead and have Linda and John kind of speak to that again, just to reiterate what that means.
I think
Since
that's
there's
a good way to do it.
Do you want to explain the accounted for in the report, and then I'll go into the detail? Or? I'll just go ahead and start it off, and John can chime in. So the 322, the wording in the management letter is unaccounted for. I mean, that's an accounting term that John needed to use per the management letter recommendation to start reconciling the account on a monthly basis. It's not like it's missing money or it is unaccounted for how we think. So in going back through the process, there are several issues. There's school transfers that weren't posted. There's pilot payment transfers that weren't posted. There's deferred comp matches that weren't posted. There's ADP annual fees that weren't posted. There's gun and uniform expenses that weren't posted. There's several components from years that you could probably go back since the time the previous finance director was here that he's never posted deferred comp match because he didn't know he was supposed to. He missed a couple pilot payment transfers, just like the $850,000 promissory note that was constantly carried on the bank rec, but never a true accounting entry made for. So it's not like it's missing money or we know the pieces, but when you make an adjustment, a prior period adjustment, you don't go back to 2018 and make a prior period, 2019 make a prior period, 2020. You make a prior period adjustment for the year that you're auditing to get the balance correct, so that moving forward, going into the next year, your bank balance carries forward as properly stated. So I don't know if that helps clarify. I mean, we have the pieces, but you don't go back and make prior period entries in every year. You make a lump sum entry and go, okay, we know the pieces, we know. I'm looking at this and I'm going, there's no fraud here. I've done enough fraud that I know there's no fraud here. What I'm seeing is sloppy accounting, okay? So why it's been going on so long, why the previous finance director who was here for 12 years and nothing was said by prior auditors, previous administrations believed fully up until this point that there was anything wrong. He was doing his job, blah, blah, blah. I can't answer to that. The only thing I can tell you is what I've seen since I've been here. So I don't know if that helps clarify the $322,000 issue. It's not like it's missing. It's not like it's, in accounting terms, unaccounted for. We know the pieces. But there's one entry that's made, and that's a prior period because you're auditing this year and you do a prior period entry to the prior year so that moving forward, all the numbers get properly stated.
So it's,
Oh, go ahead.
I was going to say, so it's sort of the unaccounted for is an accounting term that's a little bit of a misnomer because you do know those pieces that you discussed and mentioned, maybe some others,
Yeah.
add up to the
Yeah, there's-
322,
yeah, like
and
I
that's
said,
how you
there's-
come up with the number to make the adjustment.
Correct.
Do you have the list of that?
I have a list of what I think is, I don't have a list that comes down to the 322 exactly, but yes, I have a list of payments that were missed, payroll fees that weren't posted for the year, deferred comps that weren't posted for the year, PD, fire and gun uniform expenses that weren't posted, accounts payable checks using the wrong amount, again, another year back to 2022 where the deferred comp match was never posted. So yes, I do have pieces.
And I think to be fair, you're never going to find all of those pieces.
Right.
You know, without some type of a Herculean effort. You're never going to find all those pieces to sum to that number. Just because, you know, it would take just an enormous amount. At some point, it becomes immaterial and not worth your time. And, you know, okay, well, yeah, here was a credit card invoice for gas or something, you know, that you know, for whatever it was. And I think it should be noted that all of those expenditures that she noted are normal expenditures for the city. So they're not anything that, you know, that seem inappropriate.
And all these, that whole list that you gave and all the issues of them being posted incorrectly or not posted at all, I mean, typically an auditor would find all of those through their normal audit.
Yes, if they were doing an audit, and depending on, every audit has materiality, okay? An auditor doesn't tie all the numbers down correctly. However, it's a material amount. There's a certain amount of materiality that an auditor has. If they're within that materiality amount, they don't have to make an audit adjustment. So I'm not sure what the scope of the materiality was. that the
Your
previous-
materiality for Fort Thomas is somewhere in the $150,000 range.
So why previous entries weren't made to correct these? Like I said, this is a accumulation of years of not properly making proper entries. I can tell you, going back at least 3 years from the records that I took a look at, that it's the same issue every year, so.
And I want to add to that, because you said, would an auditor find it? Normally, those issues are found in the reconciliation process by the finance person who's doing the reconciliation. So when you're doing the reconciliation, that's where something that's entered twice, something that's not entered, there's something on your bank statement that you haven't accounted for, that's where that is normally found in your monthly reconciliation. So if it happens during that month, that's your month-end reconciliation, that's where your accountant should find that, okay? Well, if you don't do that monthly reconciliation and you try to do it at the end of the year, you know, you're going to miss something.
I think one of the questions asked previously was how were the books able to be closed if the numbers didn't line up? So how, for the last couple of years, how are we able to move an unreconciled book that didn't line up? I don't know if that's the right term for it, but that the numbers didn't line up at the end of the year that we're moving into the year. How were they able to close that year out?
Again, it comes down to materiality. If the auditor has a materiality level of $150,000, the bank wrecks out $75,000 at the end of the year, the previous finance director says, hey, this is as close as I can get it. The auditor marks down, cashes out of balance, $75,000. My materiality level is 150. I'm still within my materiality level. The audit is properly stated because it hasn't exceeded materiality levels.
But typically an auditor would explain if it's
My
materiality.
general rule of thumb is if you were off $75,000, I'd say you need to fix this. You know, and I might pass it the first year and say, okay, you've got something going on here, and here's the reason. Especially if you know the reason. If the reason is you haven't reconciled, then you know okay, you need to reconcile and fix this.
Well, and that's one thing I was going to say, with the monthly reconciliations, which we've implemented now, I think that's going to be a massive, it's a complete 100% necessity, right?
Absolutely.
And so from hearing you talk, I mean, not only that should keep us in the future from the finance department potentially missing something and have it, you know, be carried on and potentially also snowball to a certain extent. And we did talk a lot when we were interviewing our incoming finance director about the importance of the monthly reconciliations. We plan to discuss those at every monthly council meeting as well and have a finance report. And so I think that's a massive step in the right direction. And again, it just 100% should have been happening. And I'm glad that we've implemented
And
that.
I think you probably should point out as well as Previously, you had 16 accounts running into one account in your, bookkeeping system in Springbrook. And so you're really reconciling 16 bank accounts. Some don't have a lot of activity, but they all have activity. So you're reconciling 16 accounts into one line item, which is much harder to do than to reconcile one account that has 2 or 3 entries, one account that has 20, one account that has 50 or 100 entries, so.
No, so each one of, if it doesn't matter if it's a CD, if it's a savings account, if it's a checking account, except for the checking and the accounts payable, they are intertwined. You can't separate those two accounts. Every account has a separate line item and account number in the general ledger now. So at every one of those bank recs, every CD, every savings account, every checking account has a bank reconciliation at the end of the month.
The 150,000 variance, is that an annual or is that?
It's calculated annually with the audit. We usually base it on your revenue, so by fund, so your general fund revenue, your KDOT fund revenue, your internal service fund revenue. So each fund has its own materiality. This is all referencing the general fund.
Is roughly what, 1% of total revenues?
It's a calculation.
Yeah.
It's an accepted calculation in our audit practice guidance.
So for our size city, with our size revenue, is 150, is that acceptable?
About 150,000, yeah, exactly. And that's an estimate. I don't know what the exact number.
Yeah, but it should never get to that point if we reconcile every single month.
Absolutely,
Yeah.
absolutely.
So just to double click on it, I think there's a lot of confusion out there that there's cash missing. So to grossly oversimplify things, if you have $200,000 in a checking account, and there's a vehicle purchased for the city, and there's 200,000 in the cash ledger, and you don't do that transaction, you have 150 now in the checking account because you paid for the vehicle.
Exactly.
The asset isn't recorded, the cash isn't lowered, and then you come back years later, and I understand there's all sorts of transactions going on, but just to grossly oversimplify, and you look at it, there's going to be $200,000 on the cash ledger because the entry was never made, but you in fact have 150 in the account. So you say, we're missing $50,000 in cash.
That's exactly right.
There isn't fraud, it was a real purchase, but because the accounting is very sloppy, numerous times over numerous years, you get all these things, and it sounds like there's cash missing, but in your opinion, there isn't fraud. The cash balances that we show are correct. It's solely on the accounting entry side, not the proper internal controls, not procedure followed, et cetera, et cetera.
That's correct. It's a lack of proper accounting and making journal entries for things that happen during normal day activities.
How many years back did you look to come to this conclusion?
I went back about 3 years.
3?
Springbrook, you only have this much of a window because you just switched 2.5 years ago, so.
How much of the 322 were you able to find?
What I have here totals up to 349,000. I have another 250, but then you also had opioid funds that were a receipt on the other side that weren't being posted. So you've got a netting effect going here.
There's receipts in there as well.
One goes against the other. So there's a combination of receipts not being posted. There's a combination of expenses not being posted.
If you had a guess, how far back would this have gone? Hard to say.
It's hard to say. If my gut says probably since the finance director was hired.
Will this, for lack of a
I
better
don't know
term-
why practices would have changed midstream or just changing new software. If you're doing it one way, the first year you're here, the second year you're here, you're not, unless something else happens, you're not going to change what you're doing for the 10th, 11th, and 12th year that you're here.
For lack of a better term, will this be quote-unquote cleaned up before Steve
It's
joins
already
us?
been cleaned up.
Okay,
It's
I
cleaned
just
up
don't
with the
wanna
23-24 audit.
set him up for failure, so he'll be
No.
clean slate
No,
coming in.
everything for
Okay.
24, 25, has monthly bank recs. There's file folders for every CD, every savings account. There's a monthly bank rec in there. Everything is balanced to the general ledger.
She's already sent those to us. We really haven't started procedures yet, but we've already received those.
Well, I said this tongue in cheek at the beginning of the meeting, the audit's our favorite conversation. It's obviously the most important conversation we have right now. I feel like we're a bit fortunate because this has happened, the corrections have been made, and we're literally jumping into the 24-25 audit right now. And my understanding is that we're going to have that and be able to then evaluate that audit from John and his team very early January, first of the year, right around there,
So,
correct?
yeah, right.
And so we'll kind of be able to see, to a large extent probably, the fruit of some of the labor that's been done. And then if there are continuing issues and things that need to be cleaned up, we'll have that on record, and we can continue to improve it from there. But yeah, big step moving forward.
And I know we touched on it briefly, but Linda, you're willing to kind of help Mr. Bodie moving forward for a while, just to get his feet wet, get used to the system.
Yeah, I will be here for a while to train him. I started a list of procedures, what you do during the month of July, what do you do during the month of August, what do you do on a monthly basis, what do you do on a daily basis, what do you do on a quarterly basis. So I'm laying all that out for him, giving him a good foot trail to come in here and go, okay, so he doesn't have to guess, I'm going to be here till I feel like he's properly trained, and then I'll be back on a monthly basis, checking his work, making sure he's doing monthly bank reconciliations, making sure the bank rec's tied to the general ledger, looking at other general ledger accounts to make sure they're properly stated. And whenever I feel comfortable and whenever you guys feel comfortable, then I'll just kind of fade into the sunset.
And is all that being documented? So for some, unknown reason today, he's not here in a year, it would be that seamless for someone to follow the
Yeah,
procedures
the
and
list
structure
that
we have?
the procedures I have will be documented from this point forward. And one of the things that we talked about with Steve is, I know previously as under finance director with me, I had a book of procedures. Every one of my supervisors, for every one of their tasks that they did, they had a book of procedures, so that if something happened to me, or I got sick, or I got run over by the bus, or whatever, was in a car accident, somebody should be come in and go, okay, how do I do a check? How do I write accounts payable? I flip to the tab that says accounts payable. How do I properly post real estate taxes? I go to the tab that says real estate taxes. How do I generate the tax bills? I had a whole separate binder on how to generate tax bills, how to send them out, who the mailing company, all that is. So that's going to be one of Steve's major tasks to take care of when he's here, to get those procedures developed in a more detailed manner.
And great that he has prior Springbrook
Yes.
experience.
Yes, absolutely.
Already used to the system.
Yes.
And I think it's fair to point out, too, that your accounting staff, whose name, Rhonda and Lana, do a phenomenal job. Everything that we asked them for, they were able to provide, like, without question, very quickly, very easily. So it's not a dumpster fire by any stretch, other than kind of this one incident, and I can honestly say, the job that the former finance director did, 80% of it was probably okay. I mean, it's just this one glaring thing that was an issue, but your finance team does a good job. Everything that we asked for, they provided in a very orderly, they knew exactly what we were looking for. They're very prompt in how they do things, and so we had no issue with those folks at all. So, so that should help you at least know that you do have good footing here. There is a good foundation.
And John, if our previous auditor had been doing the job that you did, that type of information would have been made available to Matt and the administration, correct?
I'm going to step very lightly here when I talk about a prior auditor, because as a professional, that's just not something that's
Fair enough.
He had a lot of years of experience here, and he had a lot more years of experience than I do, and he's seen things here. He knows what's going on. He should have known the city intimately. So I'm going to be very careful how I proceed with that. But I know that in the scope of the 1 year that we did the audit, we looked back 1 year and asked for work papers, that the work papers weren't what we would call acceptable work paper for the cash. They wouldn't have met standards.
Gotcha. Thank you.
Go ahead.
Go ahead, Lauren.
With like next steps, would a forensic audit be something you would recommend doing still, or is this kind of redundant?
I think you'd be throwing your money away. I think they would come back after significant evaluation. The fact that your Springbrook only goes back 2 years really limits what they can look at anyway. And then they're going to come back and say, yeah, this is sloppy accounting.
Okay.
Do we have access to the previous bookkeeping prior to Springbrook?
I think there's limited access to the previous program, but I will tell you, according to Kentucky records retention, that most of the accounting records only have to be kept 3 years back. So I don't know how many years the city.
The detailed records.
The detailed records, detailed general ledgers, bank statements, bank reconciliations, fixed asset registers, all those types of things only have to be kept 3 years back. I'm not sure what the city has, but I know going back, trying to get bank statements, I know from doing fraud investigations and audits that the bank only has to keep 7 years' worth of bank statements. So, like I said, I feel very strongly, like John just said, I can tell you, looking back into the system for the last couple of years, I can tell you they're going to come back and tell you it's been sloppy accounting.
For forensic audit, is that more geared towards fraud? Like, is that uncovering fraud?
Yes.
More or less?
Yes.
Okay.
And my gut, like I said, looking at this stuff, I've been through major fraud investigations before. Looking at this, honestly, I was quite surprised when I came in and saw the lack of detail or attention on the bank accounting side of the records.
So can you, in maybe layman's terms, could you explain what a forensic, you set up certain tests and things you do of information, and that's looking at, is the financial position of the city stated fairly, and are there material misstatements, right? So
Yeah, no.
that's the normal run-of-the-mill stuff.
That's a normal financial.
Right, and that's what you were engaged to
That's what
do,
we do.
not a forensic audit.
That's correct.
Right? So how would, what sort of things would be employed during a forensic audit that would maybe help, if there is something there? I understand your opinion, but how that would be different?
This is a question for, I'm not a forensic auditor, so Linda, this is probably a better question.
I'm not a forensic auditor either, but I will tell you, from dealing with the fraud situations that I've dealt with, the forensic audit just basically comes in and does more detail work. So they'll come in and they'll go, okay, I want to see records for this transaction. I want to see records for this transaction. They'll do a more in-depth scope than what a general audit does. The general audit will come in and they'll take a look at this position in time at June 30, are your records, are your financial statements fairly stated? They'll take a look at your June 30 cash amounts, your receivables, your payables, and go, okay, here's some documentation to back it up, blah, 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 looks good.
Fairly prior years.
Hey, guys, I just want to make sure, it sounds like we're skipping ahead to number 2 here, the forensic audit conversation. And not that I want to hear this, and I think it flowed perfectly into the discussion we're having right now. Honestly, I think the questions that we have had have been unbelievable, you know what I mean? I've been telling people for a long time, we're not broke, we're broken, and it sounds like this is the first time that I can hear that. I feel extremely comfortable about the path we're about to take, not just for us as council members, but the transparency we're going to give to the citizens as well, right? You know what I mean? Because to me, the number one thing that matters in any city and any business is the numbers, right? And if we don't know the numbers, we can't make the decisions we need to in order to move forward and give the people what they deserve from the money they're spending. So I think this conversation is fantastic, but I just don't want to get too far ahead and finish down the conversation so it doesn't get muddled.
I do have a question about the audit. So on page 6, there's,
Page 6 of the audit report.
of the audit report,
Okay,
correct?
give me 1 second.
Yes.
All right.
They don't seem to have a problem here with me.
Could you describe in more detail the way you go about finding our net position, and more specifically, the difference between the 2023 and 24 liability section? Like, what was in 2024, you see the liability section jump by $2 million, the current liabilities.
Right.
Like, what was that?
I can jump on that one for you because I'm pretty familiar with that. So at the end of June of 2024, you had the Tower Park project going on. You had accounts payable for that project alone of $1.4 million.
It just carried forward to the next year?
Correct.
Okay.
Now, that project was finished during fiscal year, sorry, that was the end of '23. That project carried forward to '23-24 and was finished, and that's why the liabilities went down significantly.
And then what about so that's why the long-term went down significantly? Is that what you're?
That would be why the current liabilities went down.
Right.
Long-term could be.
No, the current liabilities went up.
Yeah,
The
your long-term liabilities are a combination of your debt and your pension liability, your OPEB pension liability,
Yeah, I saw that.
and that
too.
jumps,
Hi,
do you have?
yeah, Councilman, if you go to page 54 of the audit report, and this will give you a good example, just really why that dropped so significantly. Or 53 and 54. See the proportionate, near the top, where it says proportionate share of the net pension liability.
Yes?
If you look on page 53, that drops in 20, and a little bit of explanation here. 23 is the 24 fiscal year, and 22 is the 23 fiscal year. That's a year of measurement. That's how it's displayed. So it drops from 5.1 million to 4.3 million, that liability. So that's, that's almost $800,000, something like that. And then the proportion, then if you go to page 54, this is for the hazardous system, it drops from 19.3 to 16, so that's $3 million. So that's just a function of your SERS liability decreasing through the, basically the improvement in the market.
So that's
for the SERS
a
system.
picture of what we'll owe in perpetuity.
Yeah, that's the, yeah, exactly, that's the SERS, your SERS liability, and we really haven't talked much about that, but, that's your liability that you owe through the pension system that's recorded in your financial statements. It's not in your funds that you work with on a regular basis, it's in your government-wide financial statements. And it shows the total liability that the city owns, the SERS program for their hazardous and non-hazardous pension and their hazardous and non-hazardous other post-employment benefits. And that's a pretty big number. If you go back to the statement of net position, the pension liability for the city is like $20 million. It's about 21 total between pension and OPEB. And so that's why that number decreased pretty significantly. Plus, in addition to what Linda said.
I've got an audit question too that we've talked about previously, but it's been brought up by several people in the community as well. And it was one of the points that your audit made, John. The finding that the actual expenditures were, I'll use round numbers, $1,070,000 more than the budgeted, and $2,580,000 more than revenues received. And we do have some information here about the variances, the most significant being capital expenditures over budget, interfund transfers, and police. I'd just like some clarification for everybody on, what that means and why it was alarming to see that we had expenditures over $1 million over budget. Just some clarification on that. And I believe from previous conversations, it's a function of record keeping, for lack of a better term, but I'd like some.
Yeah, thank you. So where this comes from is on your in your financial statements, page 49, if I can send it to you there directly. We show your original budget, your final budget, and then your actual revenues and actual expenditures, and then there's a variance column. So page 49.
Okay.
Okay, and so you can see there with your final budget, you raised your charges to appropriations. This is all in the general fund, by the way, so it's only the general fund. You raised your charges of appropriation from 19.5 to 20.3, so right at an $800,000 increase in appropriations, and then you ended up expending as an actual 21.4. That's the $1 million difference. Okay. The vast majority of that capital assets and interfund transfers really being the two that caused the issue. The Tower Park renovations and that type of thing was the vast majority, I think, of that. So when you amended the budget, you didn't account for some of those items that were coming down the pike, either receivables that or payables, I'm sorry, they got booked, maybe in the cash basis in June when you amended your budget. Those hadn't been, weren't on the books yet or as expendables. But then when you book your payables for your next 30, 60 days, those bills from the contractors come in, and they're really June bills, but they come in August. When those get booked into your payables, that you get this. And so one of the jobs of the finance director is to be alert for what's coming down the pike at the end of the fiscal year. So when you amend your budget, and hold your police department, your public works department, your fire department, hold those folks accountable to say, what are the bills that are going to be coming in June, July, August, so that we can make sure that when we amend the budget, we amend it appropriately. Because those are all expenditures that you're okay with making. You had the Tower Park project that you approved, and they're being expended in the current fiscal year, in the 24 fiscal year versus the 25 fiscal year. You don't really care, probably. If you ask the citizenry, who cares when that bill is paid in 24 or 25? You just want to budget appropriately for it. So you can amend the budget to pull that bill back into your year.
So
and that wasn't done, to that level.
Absolutely. It sounds like a real-life example of the example that Eric gave, basically, right? With the the 200,000 in a checking account, you have an expenditure, you have an asset, but it's not reported, and so there's.
Yeah, very, very, very similar, right? Yeah, because if you haven't on your books, you really haven't made that expenditure yet, and because you're not going to make it until you pay that accounts, on a cash basis, you're not going to make it until that accounts payable is paid. But you may not have even booked that payable yet at the end of the year because that bill doesn't come in. The contractor may send a bill for May and June, and they may send it August 15th.
What you're saying is if you were on top of it, you would make an accrual, right? I don't know if government accounting works the way as.
100%.
You would
yeah.
accrue that.
I was trying not to use cruel words, but if you, you would make an accrual of those expenditures at June 30th, and make an estimate, and you should be able to make an estimate of what's out there, what's going to be coming in. And that's really one of the harder jobs of a finance director, is doing that at the end of the year. Because
You'll never get it exactly right, but it won't be off $1 million.
Yeah, you may not get it exactly. And, if you were $100,000 over budget, for me, that's, what is that, 1% or 0.5%? Whatever, that's, I'm not worried about that. But, but $1 million is enough to point it out.
And just the clarity there, when you say there's the threshold that we're talking about, it's not that it's necessarily an issue in reality. It's an accounting sort of thing. But if those things are continually occurring, there's a problem with the process. So you point, not that we can't close the books knowing what happened, but something needs to be fixed, or it's going to continue on, and we're going to wind up with an accumulation issue.
That's exactly right. And this is a complicated process. It's not an easy process. I mean, I don't want anybody to get the feeling that this is so simple. Why didn't they just do it? Because you really have to, you have to know what's going on in your city, and you have to lean on your public works person. You have to lean on your, your parks people that are running these projects, and you say, I have to know what's going on, and you have to demand that.
But that's in the job description.
Yeah.
Right.
I'm assuming.
I would
So that is a good point. So we are accrual, so we should be acting, because it seems like, some things are reported as a cash basis, where it should be accrual basis.
You want to jump? You're better at this.
And most cities go through the fiscal year on a cash basis, and then when the audit comes at June 30, they switch to the accrual basis and get all the expenses, so that you had that snapshot for the year. Because if I'm going to give you the September financial statements and you want an accrual basis, I have to wait 30 to 60 days to see what receivables and payables came in that were related to September 30th and make those entries before I could give you that financial statement. So most cities will do a cash basis throughout the year, and then they'll make the appropriate accrual adjustments at the end of the year, June 30, to get that snapshot of this is where we ended the fiscal year.
What I'd like to do, there can be further discussion, but I think we're going to continue the discussion, and I don't want to step on anybody's toes with questions that may be from the public, and we would like to have some public comment. Do you all agree? I think this would be a good time to open it up for some public comment.
Any other questions for them? I think they did a great job. Thank you for that, by the way.
Yeah. And you two will please stay to help address questions and so on and so forth?
Absolutely,
Okay.
I just answer them all.
Right. Yeah, with that, anybody, let's open it on up to public comment. Is there a sign-in sheet, Matt?
I always say, be careful of the question you ask an accountant, because he might give you an answer.
Nicole?
Thank you, Nicole at Highland Avenue. So I wanted to, is it on?
Is it green?
Is it green?
Okay. Nicole Utz, Highland Avenue. So I just want to thank John and Linda for your comments. As a citizen, it makes me feel much better, but I'll say I have a lot more questions now. So first of all, last time when I spoke, I talked about action items, and so speaking directly to what you just mentioned, I'm going to argue that probably that $1.1 million was overspending on Tower Park, probably unbeknownst to council. That's why I specifically am asking that there's profit and loss statements by every single city event. And I'm also asking for monthly department reports showing budget versus actual, because that's the way council and us citizens hold Matt and his team accountable for spending in this city. Otherwise, we're going to be down this path that isn't healthy. I want to go back to, and I'm going to bring this all back together, so just give me a second. Last week, I asked about government accounting principles, which we know that the city's following, which is good. But over the weekend, I spent time doing research because I'm not a government accountant, but I understand numbers pretty well. So Rule 100, I believe it is, states that and I'm going to simplify this, that your ending balance of said period flows through to your beginning balance of said period. And so that's your flow through. They should match. And I know a couple of citizens and myself have asked how the pension spiking affected the budget and the amended budget. And I don't think we really got clear answers until yesterday afternoon. I don't know if council received all that, but I have copies here for you. So when we look at ordinance, I guess it's 07/2025, it states that the ending balance for the city was $15,495,121. But then when you look at the flow through to the next ordinance, 08/2025, that value is $15,217,400. Okay, that's a difference of $277,721. That's your pension spiking difference. Like, again, I agree, sloppy accounting, but how does this, I'm just saying, how does this continue to happen? And when you sit back and ask yourself, why? Why is this happening? Why are we allowing these type of issues and discrepancies? This falls, in my opinion, with the executive leadership of the city. The same citizens shouldn't have to be researching issues, doing root cause analysis, asking the questions, supporting our council members that are asking the same questions. Andy Ellison asked these same questions in the May meeting. And nothing, we're still on this hamster wheel. We're still spinning because we don't fully know what's happened. And again, I agree, it's sloppy accounting through and through, but that doesn't excuse the fact that that this is happening. And when I reviewed the prior budget cycle and amended budget, that was out $140,000, I think. And again, those flow-throughs are important. It's important that we're asking these questions as citizens, that we're holding the city administration accountable, because if we don't, guess what's going to happen? We're going to overspend. We're going to go down the same trajectory. You're going to raise our taxes and raise our taxes and raise our taxes to fix the problems. So I feel more confident that we're getting some policy and procedures in place, but this is where on the city website we need to have full disclosure of all financials, all profit loss statements, all monthly reports from the city. And then, really, I think what's happened here just through this process is the citizens have lost trust. They've lost trust in the administration. We cannot trust what's happening because we know it's overspending. I will gladly start to research that next. But I'm pretty sure overspending is happening above and beyond what city council is approving, and that's a problem. And then the final thing I asked, and then it has to do with, I think at the last finance meeting, it was mentioned that the mayor pre-signs checks or pre-stamps checks or something like that, and I just want to know, given his absence, and, you know, of course, we're all praying for him and wishing him the best, but given this and given the fiduciary responsibility of check writing authority, I just want to have clarification, like, have checks been issued with his signature, even though he hasn't been with us since, I guess, the end of September?
Yeah, sure, I can let Matt elaborate, but what I do know about that, so for the last number of years, I don't know how many years, but council has also signed checks. The members of the finance committee, we're getting away from that now.
Okay.
There was some language that Matt has the authority to sign on the mayor's behalf. I don't want to speak for the specifics, maybe you can.
So the bank, and we're working to fix that, but the bank requires 2 signatures. So the mayor's is printed, and mine is, I actually sign every check. It used to come from the legislative branch, which was not correct, and that was one thing that John had pointed out. So, so yes, his name is printed on there. It requires 2, right now, it requires 2 signatures, and I'm trying to work with the bank because it's not, I don't see a lot of value in that. But I do hand sign every check that goes out.
I do believe there's an advantage of having somebody that can recognize an expense or not recognize an expense to sign the checks. When you have, like Ben or anybody here, we get a stack of checks at the beginning of the meeting, which is how it happened for a long time. That, you know, we're not here, so that's not the person that should be signing the check. The person that, or even a department head or you,
Correct.
that's the person that should be seeing these checks go out.
Because you guys really don't know what's being spent. And then on top of that, you know, I reviewed the check ledger that comes from the bank every month. And now that I'm signing the checks, I actually have staff that go through and verify the actual checks to the register just to see if there's any issues, just to give another, just to get another set of eyes that, because for me to do it, I've already signed the check, so I know. So it's not really helpful for me to do that. So we've been using other staff just to be able to get another set of eyes on the checks.
Okay, and is there an explanation? Do we know the correct June 30, 2025 balance and the 7/1 opening balance? Like, do we know what that correct number is? And do we have a plan in place to correct that for the auditors when he goes through to audit the books?
So to address that question on 277, 721 difference between the amended budget for 24-25 and the beginning budget for 25-26. What happened is I have a document here that shows back on May 12th, there was communication between the former finance director and Matt, and the amended budget was basically done, and the budget for 25-26 was done. And that had the fund balance of the $15,217,400. Subsequently to that, going into June 6th, June 9th, that's when Matt started questioning why was the pension expense, because he's looking at the budget in a little bit more detail, because the former finance director did all the personnel costs. And was asking, why was the pension expense so high last year compared to what we're doing this year? That's when it was discovered that the 277 was recorded in the general ledger 2 times. And so when it was reversed out, Matt made the adjustment to reverse out the 277 out of the 24-25 amended budget, and just then carry that $15,495 to the beginning of the 25-26 budget.
So it's a mistake in the...
Correct. It was a last minute
beginning
change that was made, and
balance.
it just wasn't, that balance just wasn't carried forward to the beginning balance for the 25-26. So the $15,495,121 will be,
So how does this get corrected with documented notes then?
it'll be corrected with the amended budget.
Okay, thank you.
And it's important to state also that the bank reconciliations that they do now will have caught that.
Okay, hopefully.
I want to follow up on that real quick, just for my information. So you're basically saying that when we amend the budget for this current year, that's probably when we'll have a better idea of a true number?
Yes.
Because
Yes, because when the budget gets amended, first the audit has to be done, okay? So you're starting the budget fiscal year 25, 26 with a guesstimate of where you think you ended the year. Once the audit's done, you've got all the accruals in there for receivables, payables, you get your net equity position, your fund balance position, and when the audit's approved and there's no more adjustments that need to be made, then that beginning balance will be reflected to the June 30 final balance on the audit report.
Yeah, I mean, I
But
just.
there needs to be a note duly explaining the irregularity between the numbers, correct? I mean, when I read through the accounting principles, I think that it has to be duly noted on the amended budget as to why there was an irregularity.
I mean, there'll be discussion as to, and basically the normal discussion is we're amending the beginning balance to reflect the ending balance on the June 30 audit report.
Okay.
Okay, thank you, Nicole. Next on the list, and I apologize if I butcher a last name, Terry, and I think is it Borths?
Yes.
Okay, would you like to address?
No, I just signed
Oh, okay.
Thanks for showing up.
Well, now we know you were here. We appreciate it.
I'm for city council next year. This attendance record is flawless.
Okay, thanks, Terry. Next on the list, Joan Ferris.
That happens quite a bit.
Hi, Joan Ferris, 66 Burning Lane. Just a couple of follow-up comments about the 23-24 audit. More specifically, a Finance Committee member's comment on the audit, to paraphrase, a Finance Committee member stated in an open meeting recently that he was glad the audit found these awful things. Now we know how to do better moving forward. Some time has passed. I've heard we are no longer balancing our cash accounts only once per year. Great. There are now some financials posted on the website. Double great. I will say it would be nice if these were presented in a format that allows for searching, subtotaling, highlighting, and functions that are standard for anyone actually looking at these documents. As a PDF, many of those options are not available. For instance, when you look at the accounts payable, if it's in an Excel type of format, you can categorize them, subtotal them, see if there's 7 checks to one company, for instance, you can get that total very easily. But if otherwise, you have to read down and make a separate sheet and do it. So a little bit of usability would be nice. Oh, and where are the October numbers? It's November the 5th. I do understand that some month-end closing processes might not be 100% complete. But for example, the accounts payable file, which is essentially the bank ledger, the checkbook, should be ready the moment the calendar flips to day 1 of the next month. Put it out there. We can wait for the other reports, but why can't we have what's ready? And I don't, if you're writing checks, once the month is ended, you're done writing checks, they go to the next month. Also, a question came up earlier, will the new guy know what needs to be done? Gotta tell you, if he doesn't, you picked the wrong guy. This is basic accounting. Balancing the checkbook at the end of the month is basic accounting. If he doesn't know that, he's probably in bookkeeping 101, which is probably a high school class. That discussion is unnecessary to have. It shows, prove you're not as sloppy as the last guy. I hope to heaven he's not. I trust that he's not, because when I hear the process for interviewing and researching a little bit, I've got good faith going forward, but we don't need to say, will he know to balance the checkbook at the end of the month? I hope so. As for using better practices moving forward, and I'm sorry, going to be repeating what Nicole said, I believe Matt mentioned several meetings ago that Mayor Haas signs a number of blank checks, so they're ready when Matt needs to issue a payment for something. I'm curious if any of these pre-signed checks are still being used. It seems as if perhaps a hold should be on those. Also, having Joe Ewald's picture on the city's website as being our financial director, and on the voice recording when someone calls the city, makes me wonder if, as we've experienced in the past, once the meeting ends, the discussions evaporate into thin air. As I described at the last finance meeting, it's well beyond too late for promises to do better. We've seen similar promises on so many different topics be made, basically, I believe, to shut down the discourse. You promised there's no more need for any more questions. Citizens will no longer accept promises. We need to see action and lots of it soon. Thank you. And I have a PS. It keeps coming up, there is no fraud. My question is this: when does taking a salary without doing the job fraud? I don't think it has to be money in your pocket. And it seems as if absolutely no one has ever accused or thought or even considered that there was money going in the pockets. But taking a salary without doing the job, to me, is defrauding the public. The bad accounting, why are we paying for bad accounting? I was married to an accountant until he passed, but I just can't imagine if he heard these things that, 16 accounts were rolled into one and balanced once a year. That's just blunt, and then to get paid for doing that, it's just crazy. So I'm not sure that the fraud has to say, I've got extra $100 bills, coming out of my back pocket. I think taking a salary, you've got to be accountable for it. And as I mentioned, advice to me was, don't let this just go saying, oh, well, mistakes were made in the past. Linda, I very much appreciate your explanation today about the $322,000. There's a little bit of this, a little bit of that. I would be curious, Ben had the question, Jeff had the question, how close did you come? And you've had an answer for that as well. I don't think it excuses all of it. I think it can justify a little bit, but I can tell you, I'm not on council. I'm just a person, but my phone has been ringing off the hook. Tell me where this money went. Tell me this, tell me that. I'm not sure that, I feel more comfortable, but I'm not everybody. The public, there's a big distrust keeps coming up, a hesitation to just accept words as they are spoken. I feel good about the words that you spoke today, but I'm not sure that it's going to go out to the public and be as accepted or understood. I appreciate what you've offered, because I think it comes closer to, people think the money evaporated. Most of us have checkbooks and accounts and family finances, and evaporation is not a generally accepted accounting principle. You just don't let it, GAAP doesn't work in households, so I don't think it should work there as well. Thank you.
Joan, you said that the mayor signs blank checks for me. I'm not sure where you got that from, but that is not accurate. Every check that is printed by the finance clerks have his name printed on it, but it cannot be cashed without my signature.
Understood.
Okay.
Understood.
You just
I
made
guess
that
when I said
statement that way.
pre-signed, pardon me?
You just said that he signs blank checks for me to use whenever I want, and I just want to make sure that was very clear that that is not a thing.
I appreciate that clarification. There are checks with my focus, I guess, is of the two signature process, which I like co-signatures on things of importance. He doesn't need to be there, or be aware of what that check is going for.
Correct.
I guess that seems a little,
Because it's the bank requires the dual check, the dual signatures, which is why.
okay, understood. And if I use the different words,
That's okay.
my point still stands the same. He doesn't, I doubt if, and I don't know his condition. It is a mystery. For all the rumors in the city, there aren't any flying around about that. It's like
And
top secret.
Linda, if you want to talk about the October, you made another statement that one.
Yeah, so the October, I can certainly put an October financial statement out there, a balance sheet for the cash, but it's not going to be correct.
How about the accounts payable part, the checkbook?
The checkbook would be the cash account, the checking account. I could put that out there, but it's tied to the accounts payable. And there's still deposits, just like yesterday. All the taxes were due October 31st. There was still a deposit that needed to be made yesterday to get money into the bank. There's investment statements that I don't get till the 15th of the month that I don't know what the interest and the change in the market value are yet. So
well, I guess what I'm curious about is if I'm getting money from somebody for whatever, it goes into the month when I get the check and I deposit the check.
correct.
I don't back deposit it.
No, but there are receipts, so There's, let's just say for CBD fund, there's SNAP payments that come in, there's Square payments that come in. Until the monthly statement comes in and we see what those amounts are and contract those back into the recreation, those don't get posted. But they hit the merchant statement in October, but we don't see that until we get the statement maybe the 5th of the month. And like I said, with the investment accounts, some of the statements I don't get till the 15th of the month, and I don't know what the interest and the change in the market value is. So I can put the cash balances out there for you to see the next day, but there's still going to be adjustments that need to be made.
I guess if I don't write a check till November 5th, even if it was due
So
October.
if you're talking about the checking account, we can put the checking account out there, but I'm talking about if you want for me to put a balance sheet out there that shows the 16 cash accounts and what their balance is, I'm going to tell you that most of those accounts are going to change because they're still.
Okay, I think I mentioned, it's more like if you're writing a check in October, that should be available November 1st.
Correct.
Okay, and I mentioned, I think there's a lot of reason to be patient.
AP account only. Yeah.
It's something. It's something. And again, I don't think anybody expects the books to close at the 1st, but I would think that the accounts payable would. Am I correct on that?
Okay, you're talking accounts payable, and I'm thinking accounts payable. When you say accounts payable, you're talking about the checking account.
I think that that's what it's titled on the
Okay,
webpage.
okay, all right.
It's just, it's just numbers we can look at, play with, wonder about, without waiting for the interest or the SNAP payments or whatever it is. And I think somebody else mentioned it before, we don't have to have the whole thing before we get anything. If there's pieces we could get, it might be helpful. Having anything out there is an improvement, but I wish they were a little bit more user-friendly.
Okay, thank you.
Thank you.
I'd like to follow up on Joan's comments real quick here. Thank you for your comments and continued support of the city and looking out for us. I think that one of the things that resonated with me that you said is I think actions speak louder than words. You know what I mean? And you want to see more from us and not just hot air. I do think that in the last couple of months we've made some really good strides. And I think today is hopefully what I consider to be a major step in regaining your trust and a lot of these citizens' trust back with being transparent. I think there's going to be some learning curves for us as well on how we do that, how we get the correct information to you, and it's not changing over time if we're posting it early. But I do think today in these quarterly meetings and the conversations we're having now, I hope starts to build a foundation where we can get it back and you can start believing that the words that are coming out of our mouth. I think that hopefully that's the truth, and I wouldn't say it if I didn't mean it. As you guys all know me, I don't mind speaking, but I love today. I can't wait to see more quarterly meetings and more updates and get us back on the right track. So.
Yeah, thank you, Joan. And I'll just say, I hope my wife's not watching, but I've got money evaporating out of my checking account all the time. And it's
Yeah, Amazon. Yeah.
Amazon every single day, yeah. It's ridiculous.
Yeah, that is one big miscellaneous. And then
100%. Oh, my God.
Those are, if you don't need a forensic accountant, if you've got miscellaneous MasterCard.
Right. Next up on the list, Mr. Steph Chalk.
Steph Chalk, 21 Lafayette, and thanks to everyone for the time and effort that you've put into getting us here today. I would agree with Adam that the meeting today is far in advance of what we've had in the past. So thank you very much. Linda and Matt, thanks for the information that you'd sent me. That was helpful as well. I'd like to pick up where we left off last Wednesday, and we were talking about reserves, and if we could talk about reserves at this meeting. Can you tell me what the reserves are today?
The reserves as of September 30th for the general fund are $13.4 million.
Thank you. And does that include the 322,498?
Yes, sir, that adjustment was made at the end of the fiscal year 2024.
Okay, thank you. I'd also like to talk a little bit about the forensic audit, and I know you've put that you've described what that account is, that accounting, what takes place with that accounting relative to what you have already done. I posit that the city had really demonstrated no process for establishing reserves. So reserves seems to be whatever's left